Hello and welcome to CommBank View, Economics and Markets, unpacking key issues each week with expert voices from among CommBank's economists and strategists. My name is Mandy Drury and I'm normally your podcast host, but today we have a very special episode given the focus and concern around improving Australia's productivity. We're honoured to be joined by Danielle Wood, Chair of the Productivity Commission of Australia, being interviewed by Luke Yeaman, the Chief Economist of CommBank.
Hello everyone, I'm Luke Yeaman, the Chief Economist here at CommBank, and today I'm really pleased to be joined by one of the most influential economists in the country, the Chair of the Productivity Commission, Danielle Wood. Danielle, welcome to the CommBank View Economics and Markets podcast.
Thank you for having me, Luke.
So there's a lot we can cover today. You've got a big job. Your job is to advise the government on how to lift productivity across the country, and I think to get us started, we could all agree that productivity is incredibly important. It's one of the biggest ways to lift long-term living standards for Australia. But I think we could also agree that productivity, both globally and here at home, has been pretty disappointing over the last couple of decades. We've seen a big productivity slump.
Yep.
Economists always have lots of explanations for these things. They like a list. Some people talk about a lack of business dynamism, a lack of capital investment, could be a mismeasurement issue, could be about the shift to a services-led economy. So as an expert in this area, having looked at this research, what's the one thing in particular that you put that slump down to globally? Why has productivity been so weak?
I do love a list, and you have just touched on a lot of the important ones, and it is really important to acknowledge that global picture when we think about Australia, because a lot of these things are common structural forces across countries. So it is partly around that sort of structural shift in the economy. As we get richer, we produce and consume less stuff, we produce and consume more services, and particularly the services that have ramped up very quickly tend to be labour-intensive care services. There are measurement issues, but they do tend to be lower productivity overall. So that brings down. Investment just hasn't really recovered anywhere post-GFC.
Yeah.
Say the kind of animal spirits of business have almost left the building. In Australia, down more than 3 percentage points since the global financial crisis. That means less technology, less capital per worker. I think the business dynamism one plays a role as well. It's a little bit harder to track to productivity. But if you've got fewer people switching jobs, fewer new businesses, fewer disruptions in markets, it tends to be lower. But one that I think is really important and often missed is the role of technology. Yeah. And it's kind of hard to get your head around when technology seems like it's changing more rapidly. But over the past 20 years, we've had less of a shift in the frontier. Yeah. So technology has played less of a role in driving growth than it has in previous decades.
You hear this argument a bit, and people will say that the current technologies are less transformative than the previous ones. But if you look around, people would say technology is moving at a really rapid pace. So you think there is something in that? Do you think that technology maybe is less transformative than it was previously?
In a rearview mirror sense. So I'm saying over the past 20 years, I can see that it's made less of a contribution to the frontier. So in that sense, it hasn't added as much as it has in the past. But when I look at AI, I look at robotics, they are general purpose technologies. And those are the things in the past that have unleashed waves of growth. So I'm personally kind of optimistic about where that goes, but I think it is part of the explanation of the last 20 years.
Yeah, we'll definitely come to AI. So if that's the global picture and those big drivers, you've highlighted a few there that you think are most important in that space. If you bring it home to Australia, absolute productivity matters, but relative productivity matters as well.
Yeah.
And for people here in Australia looking out, how do you think Australia is compared to its peers during this period? So everyone has slowed down.
Yep.
But has Australia done a little better than the average? Have we done a little worse than the average? Are we in the middle of the pack? And what do you put that down to?
It all depends on the time period you choose. And this is you have to be very skeptical when you hear people making these relative comparisons because slowdowns started a bit earlier in some places. Our really big slowdown happened post-2016. That's where we've essentially flatlined, other than kind of weird blip in the middle during COVID. So over the last 10 years, we've been doing pretty poorly by global standards. If you look over a longer 20-year period, not so bad.
And is there anything in 2016 that you can pinpoint? Is there anything in particular the PC looks at to just describe and explain that difference? Because it seems to go beyond the global trend.
Yeah, we have all these kind of interesting mining cycles which can play havoc with the numbers. So, it can be to do with where we are at. The most striking thing, I think, probably, though, in the past 5 years has been kind of the US versus
Yeah.
everyone else.
Yeah.
So, we, like UK, like Europe, are in a period of pretty low flatlining growth, whereas the US is growing at about
been an exceptional
2% a year,
performance really there,
which is
hasn't it?
extraordinary. Some of that is measurement, so like we always have to be careful. They take out non-market services, and that's actually been part of what I said before has been suppressing our growth. So it's not an apples with apples comparison, but I think what we are seeing there is the impact of those incredible tech companies that have been creating so much value without a commensurate rise in inputs.
Yeah. So we might come back to the size of government and the services economy and what that means. I just want to ask though, before we move on to AI, which is a huge topic, there is a lot of negativity and quite a bit of hand-wringing around productivity. There's a lot of discussion, and I think rightly we all want to see productivity lift. But is there anything you can point to for our listeners? You've looked at this closely. Is there anything in the Australian context, any success stories that you can point to, anything where you've seen a meaningful shift in productivity over the past sort of 5 to 10 years? Is there something you can point to and say that's a great example of where we did see some innovative change?
I think some of the kind of canonical examples are things like national competition policy through the 90s, which we have relaunched, which is, I really like it because it's an infrastructure to try and do some of the hard reforms that people like me talk about. And often they are a bit bitsy individually. So this is a whole lot of stuff around reducing, bad regulations that sit there in state governments, things that stop us operating as a unified country. We create all these kind of barriers to trade through different product standards or occupational licenses. This infrastructure says Commonwealth government is going to pay the states to do the work of dismantling those barriers. It did work really effectively first time around, and I think, we are starting to see. You're
feeling hopeful on that? Is there enough money on the table this time around?
I would like to see more money on the table. There's $900 million fund at the moment that is order of magnitude smaller than the previous version. But I think the government is seeing it as a kind of long-term reform agenda. So I certainly hope more money goes in. I think housing actually, it's going to sound strange for me to say it, but I think is the
with some people.
The other area where reform is starting to happen. And, we've known for a long time supply matters. Planning reforms are a big barrier to building what we need, the houses close to jobs and amenities. Commonwealth has come to the party with money, but we've actually seen, here, Victoria, WA, making some really big and meaningful changes. And I think that will have an impact over time.
Okay, that's great to hear. I think it's clearly a major national challenge that everyone's focused on, so it's good to hear there's some optimism in that space. I did want to come to AI because it's clearly one of the biggest issues that everyone's thinking about today, and it's going to make a big difference to the state and future direction of the economy. It's really the elephant in the room here. Many people are saying this is what's going to solve the productivity slump, and I'll confess I'm in that camp. I think there's going to be a meaningful uplift coming. But again, as always with economists, there's a wide range of views. Some people say it's going to be pretty small. Some people think this is going to be the largest productivity boom we've seen almost in history. So where are you? You said earlier you're optimistic, but where do you sit on the spectrum, and what kind of productivity uplift might we see globally from AI over the next decade?
Yeah, it is. It's an area with so much uncertainty, and I've never been an economic forecaster, so I don't want to get myself in trouble now. But we did some work for our reports to the government late last year on productivity on this question, and we used an approach that's been used in a number of nations globally. It basically says kind of, let's look at the different tasks across the economy, the ones that are most easily automated by AI, and then use that to kind of give a measure of what I would call the kind of task-specific efficiency uplift. From that, our estimate, and it was conservative, was that AI could add 4% to labour productivity over the decade.
Okay.
So if you think, we've been running at about 0.3% a year on average.
Yeah, it's meaningful.
It is meaningful, and not much else is going to kind of give you something of that magnitude. So that's, if you just think about it in terms of task-specific efficiencies, I think you start getting into those really big numbers if you think AI is going to speed up the pace of innovation itself.
Yeah.
So if it starts to remove constraints on innovation in the health sector that's going to allow us to live longer, better lives, or speed up the pace of green technology that means we have energy abundance, those kind of changes are what then puts you on a a really different trajectory.
And you think it's a bit early to say that at this stage?
I think it's too early to say. But, I can certainly see where that optimism comes from.
Yeah. If you, again, bringing it back home to Australia, I think PC also did a little work around, just they looked at different countries and what their profiles might look like. We recently had a conference at CBA where Sam Altman spoke, and he mentioned then that the pace of the technology improvement was in line with all of their expectations. It was basically tracking right on the money. But it was the human elements of adoption that actually continued to lag. And a lot depends here on not just the technology, but on how businesses, how governments, how people adopt this technology. So I often say AI is as much a leadership challenge as it is a technology challenge.
Absolutely.
As an aside, we recently launched a set of innovation awards here at CBA for small businesses in particular, on the premise that we don't have an ideas problem, we've got an execution problem, essentially.
Yep.
So my prior is that Australia hasn't always been the best, especially once you go beyond some of the big companies in the mining sector, for example. Once you go down to the medium and smaller sized businesses in Australia, we haven't always been at the forefront of adopting new technology and changing our business practices compared to, say, the US, which you highlighted earlier. So do you think Australia will be, as part of this wave, again, at the front of the pack? Will we be a fast follower, or will we be lagging a little bit here? And what could change that?
Yeah, this is a critical question. At the moment, it's hard to get good comparable data, but people have pulled together sort of surveys of business executives across countries, and we are lagging.
Right.
We are lagging not just the US, but, the UK and Canada and other countries we might typically compare ourselves to. I think it is a management challenge, as you say. There's been work done in the past surveying management capability across countries, and that's tended to identify that, particularly in the digital space, Australian firms or Australian managers are kind of less confident in identifying the technologies that will make a difference, and then less confident in the implementation and the rollout. And so with AI, the benefits obviously only come once you adopt it, but it's also, moving past the kind of shallow adoption, I'm using it to write better emails, take my meeting minutes, to, the kind of fundamental reconfiguration of businesses, processes and products. So I think we do have a challenge there. As you say, it's kind of the small and medium end of the business market that will be most challenged.
That matters a lot, doesn't it? I mean, if you're talking about productivity uplifts of, close to 0.5 percentage point a year for the countries that really take this up and adopt well, if we're not at the front of that pack, we're going to fall behind other countries over time. So are there things that can be done? It's very hard to shift culture, and I assume some of this relates to the structure of our economy, but are there things that you can see or that you'd be suggesting that would help drive more adoption and innovation across the economy?
Yeah, one thing we suggested in our prod reports was around, because often it's a knowledge barrier of how to do this, support for training for small to medium-sized businesses on management capability and AI skills. So we have really low rates of work-related training in small and medium businesses here, again, compared to other countries. Big businesses do pretty well, but when it comes to that group, and given this is a kind of rapid transition, there are sets of specific skills that we want those businesses to learn in terms of how to do it, but then to train up their people. Some government support makes sense. We've tried various schemes of support for this in the past. We haven't been very good at evaluating it, so we think we should maybe do some trials, evaluate, but then it could be something that we roll out sector-wide. And places like Singapore, do this kind of stuff pretty well.
Okay. Well, there's more to do there then. There's two other quick questions on AI that I wanted to touch on before we move off that topic. I think in a speech at the National Press Club, you said that Australia should avoid regulating its way out of that opportunity around AI. And I think that drew a little bit of attention. Do you want to just explain what you meant by that?
Yeah, look, what I meant by that is when we think, it's not to say that there's not harms from the technologies that we shouldn't be thinking about, but a lot of the harms from AI are supercharged versions of existing things we already worry about. So, we might be worried about safety of products or misinformation or defamation or, you can think of a whole range, competition, consumer issues. So many of these things we have existing laws to cover. So our approach has always been, well, let's make sure that those laws are fit for purpose. We should absolutely review them. If there's holes that don't work in a world of AI, let's fill them. But let's do that in preference to coming in over the top with a kind of overarching AI act. Remember there was discussion of kind of a guardrails approach. And I think the risk of doing that, we've seen equivalents happen in Europe. They now have an AI act, actually. Before that, they had their CDR regime, CDPR. It can be very stifling. You get a lot of duplication with existing laws. It creates a lot of uncertainty, and that slows businesses willing to adopt the technology. So the government's kind of actually taken this approach, the gap analysis and working through existing laws. I think that's the right way to go. There is a kind of broader question of kind of catastrophic or existential risks of AI. Frankly, they're not going to be solved by an Australian AI Act. That is a global challenge, and I think playing a role in that global conversation through things like the Safety Institute is the way that we participate in those important regulatory questions.
And the other quick question I wanted to ask on AI was around data centres, and it's a big topic, but there's a lot of community concern around the growth of data centres and their impact on natural resources and energy. But there's also some pretty big hopes around what it's going to do to the construction cycle, but also broader ecosystem benefits. Australia is increasingly being talked about as possibly the next place where the big frontier models could be trained. It's not guaranteed at this stage, but it's an option. Is that something we should be, from a productivity standpoint, is that something you would say we should be trying to land? Is that a national objective that's a good thing for productivity, or are they just large buildings that hold a lot of computers? I mean, is there a broader ecosystem benefit, in your view, from landing a big data centre role in Australia?
Look, I think I'd want to be convinced on that link, and I've certainly heard. So I think, at one level, it's a piece of infrastructure, and we will need to have compute to do the sorts of transformations that we're talking about. But I think there's this live question of whether we would be able to leverage that broader investment into making it attractive to train here. And then there can be spillover benefits from that in terms of, smaller specific models that might spring up. So I certainly can see a potential productivity opportunity. I'm not clear 100% though on that kind of leverage question and how that plays out, and I'm not close enough to that to know. I think, the community concerns around energy and water in particular are real. And I think government, both federal and state, are right to say that should be a condition for bringing that type of investment. I'm a little worried if we layer in a whole lot of other requirements beyond those essentials. And, there's always a temptation with governments to say, and we want targets around this number of apprentices and this number of women and this for, all these other things. But, certainly on those kind of core requirements, I think the government's taken the right steps.
We'll see where that goes. There's a lot on AI that we could also discuss, but let's move on to the other big issue of the day, which is tax policy. And we've obviously had a federal budget that's been very contentious and been a lot of public debate around that. But before that, the Productivity Commission was asked to look at this issue of tax more broadly before the budget, and you did that, and you put some recommendations to government, and you had some quite detailed proposals in the corporate tax space, which included the phasing in of a cash flow tax for Australia. I mean, at a high level, what was the PC's main finding around the corporate tax system and what you wanted to see happen in that space going forward?
Yeah, so we were asked to think about business dynamism, and where we came to was that the piece around sluggish investment is a real barrier to productivity growth and dynamism. We know that tax is one thing that contributes to incentives to invest, not the only thing, but it's important. And increasingly we know our headline corporate income tax rate is not super competitive internationally. So what we were trying to do with our package was to, essentially we proposed a reduction in corporate income tax, quite significant for most companies with revenue under $1 billion, more modest reduction for bigger companies, and then replacing some of that with a cash flow tax. And that has some nice properties. It taxes normal returns less, so it's a sharper incentive to invest. We crafted it, or we calibrated it so that we weren't punching a giant hole in the budget. We tried to make it revenue neutral over time, but our modelling suggested that would lead to an uplift in GDP of about 13 billion or 12.5%. So again, kind of big enough to get excited about.
Yeah, I mean, it didn't draw universal support. It's fair to say. I think
It's very polite.
very polite way of putting it, but it did receive some criticism. It obviously wasn't picked up in the budget. Do you reflect on that at all? Do you think there was a misfire, or do you think that just wasn't the right time for that reform right now?
Look, I think doing that type of reform in a revenue neutral way is really hard. And what we did in our final report is say, well, if you were willing to take a hit to the budget, here's a whole lot of different things you could do that would give you a bigger investment kicker, because you're giving away more money. I suspect some of those might have been more attractive to both business community and the government. But I think probably what we hit against was a very constrained fiscal environment, a government that had a different set of tax reforms that it was looking to pursue. And, in a way you couldn't blame it for not wanting to have another moving target amongst, given the reaction that it's received to the bits that it has done. So I don't think it's off the table, or the kind of the broader corporate tax reform is off the table. I think it should still be on the table, because I do believe we need to do something on that investment front. But perhaps the window wasn't just quite open at this point in time.
So on the tax package itself, which you just alluded to, that was implemented on budget night and is now looks to be going through the Senate and the House with the support of the Greens. Do you talk then about the fact that at a high level you think we've got a fairly high corporate tax rate generally, and we need to find ways to stimulate investment? It seems that the main criticism of these new measures, particularly around capital gains tax, is that they're going to potentially crimp productive investment in particularly higher risk, higher return ventures. I know there's been some carve-outs provided for obviously startups, but across the broader economy, are you concerned that these changes in isolation could hold back productivity and investment?
Look, it's not something we've done work on at the PC, so I'm kind of limited in what I can say. I've been following the debates, obviously. I think probably a lot of people underestimate the inflation adjustment. In a lot of cases, that's not huge differences between a 50% discount and an inflation
It's an interesting
adjustment.
point, because indeed, I think one thing we've talked about at CBA is I think generally we're moving into probably a higher inflation environment than we were in the past, and that
it
may
may
have
be
an
more
impact on
generous.
some of those figures, but I still think there's still valid concerns out there about this.
Yeah, but I think, there was some particular concerns around startups and kind of fast growth companies. Government has tried to address those. There are genuine questions about to what extent, is CGT rates a kind of factor versus more general corporate income tax versus cash flow challenges for startups. And there were some good bits in the budget that perhaps didn't get the attention they deserve around the kind of loss carry forwards and those things, which are about kind of cash flow challenges. But, I think it's important to look at it as a package as well. And, it can be argued to be a kind of rebalancing of the income tax system if, those things are being provided back via income tax cuts. And I think, my concern has been it's the kind of ordinary wage and salary earners that, have to increasingly cover the costs of things. It's kind of like we rely on bracket creep to do the heavy lifting. And, this I saw overall as somewhat of a rebalancing, but it only works if we continue to give those tax cuts to ordinary wage earners.
Yeah, we might come to the broader budget package because there were some other things in there around productivity that I might address. But on tax itself, you talk there about the need to have less reliance on income taxes, essentially, whether it's personal income taxes and bracket creep or whether it's the corporate tax system. The government did make some fairly significant savings in the budget, longer-term savings through the cuts to the NDIS, and which are obviously still being debated. But the changes to negative gearing and capital gains tax and trust. Do you think should people still be hoping? Are you optimistic that we'll see further changes ahead of the election? I mean, far be it from a government to provide tax cuts before an election, but do you think that there is still an active debate and room for either broader tax relief or broader tax reform over the next few years, or has that been kicked into the long grass now, given some of the budget challenges you described?
Look, I don't want to speculate too much on what the government might do, but I think, if I listen to the Treasurer, it seems like perhaps the door to further tax relief might be open. my guess is this is probably it for that kind of big tax reform this term. I think governments have to pick their battles, and there's probably only so much they can deliver in that space in
the longer term.
term.
You mentioned bracket creep. In the longer term, would you like to see changes to the way that we index tax brackets in that space?
I'd certainly like it as part of the discussion.
Yeah, interesting. So I wanted to then move, as you said, to the broader budget package. There was a set of other measures. I think you might have expressed some frustration that all the focus went onto these tax measures and maybe a bit less on the other parts of the package. There was a heavy regulatory focus there. Do you think that package was ambitious enough? Was there anything in particular in there that you were pleased to see on budget night that goes to some of these regulatory and productivity challenges that you've described?
Look, it's actually a really strong package, and that's where my frustration comes from. I think we love to talk about tax as a nation, but in a way, some of the spending reductions in the NDIS and the productivity package are more important, I think, and bigger. There's a lot in there, and like any area of productivity reform, you sort of start to sound like a laundry list pretty quickly, but that's the nature of the beast. But some things that I was really pleased to see in there, more money to incentivise states on housing policy. I said before, I think it's great to see progress, but we have to get more. We still have planning regimes that are too restrictive. We still have very slow approval processes. We still have challenges with connecting essential infrastructure, and housing just sits at the heart of so many of our big challenges. There was some really important stuff on migration in there, reforming the points test so that we are attracting the kind of highest skilled migrants that are going to add most value, speeding up work tests so that people can actually kind of do the thing that they're here to do, which is really important for tapping the human capital.
Those migration issues haven't drawn much attention.
Barely mentioned as far as I can see. And then some of the kind of regulatory reforms, a number in the financial services space that you would appreciate, some more things through national competition policy, for example, more consistency in product standards. So lots of things, frankly, that PC's put forward, others have put forward, that we've been talking about for a long time in some cases. So I actually do think it is quite a big, ambitious list. Some of it's pretty hard to implement, frankly. Like there's a reason some of these things haven't been done, like on the product standards. Another one was a centralised point of collection for payroll tax. That's been talked about for a very long time. So I think actually I'd really am watching to see how we go in actually implementing. It's not to say that I don't think there's more to do. And on the regulatory space, really like to see the government kind of put a line in the sand and say, this is going to be a strong focus for us. But I think there's some really great steps there.
Just on that, on the regulatory side, it's one of the most common conversations I have with clients at CBA is the regulation. Everyone wants high quality regulation and safety and good standards across the economy. But it's clear that we have an issue with regulation and the cost burden that brings for business. But it's so hard to turn that tide back. I think I mentioned earlier the work the PC done around tax. I thought that was quite comprehensive. I thought on the regulation side, I'll be honest, I was a little bit more underwhelmed by some of the PC's work in that space, if you don't mind me saying that. But it's such a hard thing to turn around because it is so incremental. Whereas if you look at, say, the US, and not everything happening in the US, everyone will support, but there has been a clear shift to a more pro-growth regulatory mindset, pro-innovation regulatory mindset in the US over the past 5 or 6 years. We haven't really seen that here. What would it take, to, as you say, to really shift that culture, shift that dial, and stop the tide of new regulation coming in?
Well, that is what the PC work was trying to do, Luke. So disappointing you found it underwhelming. The point that we made is really you need that leadership piece. And I think it's been great that we've had the Treasurer going out saying productivity is a priority and then a kind of set of reforms that have gone alongside that. That's been important. But to say, okay, we are really serious about this regulatory burden issue. We recommended a kind of target in the manner of a fiscal target, which creates a bit of accountability. But once, you're getting that message from on high, it starts to filter through all the kind of government departments, the regulators. So I do think the leadership piece is important. It's also about giving governments more power to hold the line when something goes wrong and there's going to be pressure for them to add more regulation. So That, I think, is how you start to shift the dial. And I think you combine that with a pretty strong process of going through sector by sector or regulatory area by regulatory area and trying to prune what's already there. And, you have to be willing to kind of let things grow and draw a line through things as part of that process.
Yeah, I think my criticism, to be fair, is I think there's good measures that you've suggested in that package. I just think that the size of the challenge is so large and the tide is so strong for more regulation. We're seeing a lot of change in the global economy, in the Australian economy around whether it's AI, whether it's net zero, whether it's the sort of focus on national security and resilience. All of that's driving more regulation into the system, and a lot of it is justified. But it feels like there needs to be sort of a big bang change somewhere in the system to hold that tide back. And but it sounds like that, as you say, that comes from the top.
Yeah, I think so.
Yeah. A couple of quick things I wanted to do before we finish. One is, you mentioned public sector productivity. A greater and greater share of employment in the economy and a greater share of activity in the economy is now moving into sectors linked to the government one way or another, or the care economy. We've seen this over the past decade. Do you think enough attention's being paid to lifting productivity in those sectors specifically? I know it's something the PC has written about before, but we talk a lot about private sector productivity. Are we driving enough change in the public sector, and are there things there that can be effective, or is that a harder ask?
Look, it is a harder ask, and I think historically, particularly the really sort of those labour-intensive sectors like childcare, disability care, aged care, it's been hard to get productivity, and by their nature, labour is the product essentially. I think there are some shifts. So I think technology can play a role because not every single part of those jobs has to be a person. So we're seeing, very cool and interesting use of robotics in aged care centres, pushing around laundry trolleys or clearing dishes, the kind of non-human parts. We're seeing really cool use of AI and logistics around rostering home care workers. So all of that suggests that there may be some potential for productivity gains there. We have to make sure that our regulatory settings aren't creating barriers to those getting adopted. But the other piece that is important for government in those areas is really the kind of system design, regulation kind of questions. And, you look at the NDIS and the way it had developed, I don't think anyone could say that was entirely productive, the way it was being run. The government's trying to target some of those areas where it thinks it can perform better, including, helping those people that don't need the kind of full individualised support of an NDIS plan outside of that system in a more efficient way.
Just on that point, because the NDIS is a huge part of what's happening in the economy right now, and particularly the labour market. I think we all agree it does need to be sort of pulled back. But you talked about the design phase. It was before your time, but the Productivity Commission was quite heavily involved in the design of the NDIS. Are there lessons that the PC has learnt from that process, given where the scheme is now and how hard it is to rein it back?
Look, we didn't go deep into implementation, but I think probably the failure was too much faith in competition and markets to be able to deliver good outcomes for those vulnerable consumers. And, if we look at one of the areas the government's moving in, it is to move towards systems more of kind of managed competition for areas like plan management. So government taking a more active role in stewarding the markets and making sure they're delivering good outcomes for consumers. Because I think, in some areas, and whether that's fraud or whether that's just unnecessarily high prices, it hasn't always delivered the outcomes we would have wanted.
Yeah. And finally, we haven't got time to do a big discussion on climate and net zero. It's obviously a big topic in itself.
Indeed.
But I did note some recent comments and work coming out of the PC and your Deputy Alex Robson around the renewables build out and the impact on measured productivity in Australia. I think you talked about the fact that there'd been a very large increase in the capital stock in the energy sector, but that wasn't matched by a very significant increase in output as we build these new assets out. What was the key message there for people that the PC wanted to get across?
Really, we were trying to understand the numbers, which was around the fact that we see the utility sector has had a big negative productivity shock. And, where we came to really is it's not unusual where you have these kind of big lumpy investment surges as the kind of coal-fire powered generators come to the end of life. We're always going to have to make a big investment. We've done it through renewables. In some ways that is a higher upfront capital cost, but should be lower life cycle cost, particularly once you factor in, obviously, the kind of benefits in terms of reducing emissions as well. So it can have a short-term effect or, in this case, maybe a medium-term effect of depressing the numbers. But over time, we would expect to see those investments generate a stream of value that will flow through into a better productivity number.
Yeah, great. Look, it's been a great conversation. I was going to be cheeky and ask you one last question, which is, I know that the way the PC operates, the government largely sends inquiries your way. It tells you what to dig into, but you have some capacity for self-initiated work too. This might be a stretch for you, but is there one inquiry that you haven't been sent by government that you'd love to get your hands on?
Oh, great question. We just got one on housing, which would have been top of my wish list before. But I also think there is a broader question on kind of major project or infrastructure productivity. So just like in housing, we've seen not great productivity improvements in those sectors. And it's so critical. It's a lot of government spending, but it matters a lot for national productivity. So I would love to turn around some of the things that are making it really expensive to build things. Yeah. So that's one.
Great. Well, thank you so much for that. You've been very generous with your time, and it's been a great conversation. I think we can all agree that we want Australia to succeed, and productivity is a huge part of that. So I want to wish you and all your colleagues at the PC well. We're all behind you in your efforts to help us deliver that outcome. So thank you so much, Danielle, for joining us today on the CommBank View Economics and Markets podcast.
Thank you for having me, Luke. Great conversation.
Thanks. And before we go, let's take a look at the week ahead with Carol Kong, economist and currency strategist at CommBank.
Thanks, Luke. In terms of what to watch for in the week ahead, markets continue to trade on headlines on the US-Iran war. We saw that play out earlier in the week. We saw oil prices initially jump on the back of news that Iran could potentially close the Strait of Hormuz again, and President Trump threatened military action against Iran. However, we saw oil prices quickly reverse course after peace talks in Switzerland proceeded as expected, and there were some reports saying that encouraging progress has been made. So talks are going to continue in the coming weeks with outstanding issues including the Israeli-Hezbollah conflict in Lebanon and also Iran's nuclear program. Now, it is positive that the two warring sides continue to talk, but the weekend events do suggest that the ceasefire is still very fragile and at risk of collapsing. But it is important to note that financial markets, including FX and bond markets, have become less sensitive to changes in oil prices than in previous months. Locally, we got the CPI data in Australia yesterday. Today, it is Labour Force Thursday. So the last Labour Force report was a weak one, with employment softening by almost 20,000 and the unemployment rate lifting to 4.5%. We think that some of that reflected normal volatility in the survey, whereas some of that reflected a gradually loosening labour market in Australia. Based on our internal data, we think that the report for the month of May could show that employment could recover by 30,000 in May, whereas the unemployment rate could stay steady at 4.5%. Now, it is a very volatile survey. That's why economists used to call it a labour force lottery. The monthly survey does have the potential to throw up an unusual set of numbers, so we'll have to wait and see what the data print today. Moving beyond May, we do see the labour market in Australia continue to loosen as the economy slows, so that will continue to support our view that the RBA has already finished tightening the rate hiking cycle. Offshore focus will be on the PCE deflator in the US. That is the Federal Reserve's preferred inflation gauge. As a result, it is always highly watched by financial market participants. But I think moving forward, the PCE data will continue to receive even more attention from market participants because Kevin Walsh at the last meeting reiterated his strong commitment to inflation. So I think markets are going to pay even more attention to the PCE report going forward. Now, based on the CPI and PPI figures that were already released, we think that the headline measure could rise by a solid 0.4% in the month of May, whereas the core measure could rise by a solid 0.3%. With the AI investment boom and income tax cuts adding to demand in the economy, I think that the risks are skewed to an even hotter set of figures tonight, and that could reinforce the Federal Reserve's hawkish message and potentially prompt markets to price in an even faster and bigger Fed rate hiking cycle.
Thank you so much for joining us today for this special episode of CommBank View. Make sure you join us every week for your analysis on what is shaping the markets and economies. My name is Mandy Drury. Thanks for your time.